I'll do a quick introduction from my extreme left. You can take your mic, Janet. What you do relates to SLB before I go into a few questions for you. Please take the mic.
It's a privilege and an honor to be here. We've had multiple conversations with the Capital Markets Authority, with the CSD, in terms of SLB and what we need to do to really make this product, as it were, active. So if I look at how then my role at Stanbic then intersects with SLB, so as you'll appreciate, as Stanbic, we are a licensed custodian. So we really do sit at the heart of the market infrastructure. So what this means is that we support the institutional investors, pension funds, the collective investment schemes through the appointed fund managers and also the stockbrokers and foreign investors in their capital markets activity. So then we are able then to see how we are able to see then firsthand how the way the market is structured, how the regulatory framework is structured as well, and the operational readiness, whether the CSD as a market, then, and the risk appetite then enables or suppresses SLB.
Okay, so as you continue, so specifically, what is the role of a custodian in an SLB transaction?
SLB then intersects with custody in the sense that the SLB transaction will rely on the safe custody of the security, the accurate settlement. There's been conversation around collateral, how that collateral is controlled, the asset servicing, the corporate actions, the dividends, how are we collecting that? And of course, the robust fiducial oversight. I mean, Timothy has just talked about the concern that a trustee in their individual capacity would have concerns around the security has been lent and whether that is safe. So then what it means is that whereas, yes, we are a critical player in that value chain, we will not originate trade strategies. That's the part of Elizabeth and the fund managers. Okay. But we are then critical to then ensure that there is trust, there's control, and there's market confidence. So if we then now move in terms of my role from a custodian perspective and how then we are involved from an SLB or lending transaction, is that then we have to we have to look at it. We have to look at SLB as a controlled transfer of beneficial use of securities, backed by collateral, and of course now governed by the legal, operational, and the risk frameworks that have been put in place. So when you look at it now on the way it works, then it means our primary role, as you'll appreciate, as a custodian is safekeeping and settlement of the securities, right? Okay. So then we must ensure that there is that accurate movement of the security. So if a client says, I'm willing to lend 1 million shares, I'm not moving 10 million. Okay. Right? Okay. Then you have to look at the collateral management of it. So if it's that 110, how is it receipted? Whether it's cash, whether it's securities, how is it being received? How is it being valued to ensure that it still covers the lender? Yeah. And then how are we then monitoring to ensure that if there are margin calls, that is being done and done on a prompt basis? Okay. From an asset servicing perspective, it then means I have to be mindful and aware, as Conrad mentioned, around the book closure date of the securities that have been lent. So how am I tracking to that the pension fund who has lent that security, I'm still able to track that dividend accruing to that security, and then ensuring that ideally the economic value of that security remains whole. When you then talk about reporting and the transparency, Timothy did mention around the security is out. I've lent it
Yes.
on behalf of, under the instructions of my fund manager and the fund. So then how am I ensuring that the fund has clear sight of those securities that have been lent? Because then it will also still give them comfort in that when that period ends, they will still receive whatever it is that they have lent out.
Okay.
I think the other one is around supporting the audit trails, right? The trust, the scheme must then know that I lent out my security on 12th of February. It can be a random day, it doesn't have to be fast,
Okay.
right? And I'm able to show that within that contract period, I'm monitoring to see how that security is moving and that we are doing the margin calls and the collateral is still adequate. Okay. And give that comfort even in terms of the required regulatory disclosures. Timothy did talk about the harmonization between the Capital Markets Authority and RBA and the obligations, the reporting obligations that sits therein.
Okay.
When we then now look at, the last critical one would be around the risk and fiduciary oversight. As a custodian, then I have a critical role in providing that trust and safekeeping those securities. So it's really then ensuring that lent out portfolio. Timothy did speak about if they have 1 million shares, 400,000 is active, 600 can be lent out.
Yeah.
Then we then need to ensure that that activity, when Elizabeth gives me instructions to lend out the 200, it's still in line with the 600 that has been allocated and approved for such activity. That again, it's also aligning with the fund rules and the regulatory obligations. So in a nutshell, is that nutshell?
That's
it's
it.
quite long.
Okay.
That's the role of custodian. That's how we see ourselves playing a critical role in the SLB framework.
Yeah. Now, coming to Elizabeth, you could also, in summary, highlight a few aspects, starting with who you are and where you work and what you do, and the nexus between what you do and SLB in brief.
So my name is Elizabeth Irungu, and I'm the head of business, ABSA Asset Management Limited. We are a licensed fund manager, so we deal with investing funds on behalf of our customers, including the pension schemes. So, and the other thing, and the other hat that I'm wearing when I'm seated here is that I'm the chair of the Public Markets Committee under the Fund Managers Association, an association of fund managers in Kenya who are aligned in terms of making sure that we deepen our services and the reach of our services to the people. And we also work closely with our regulators to make sure that we give professional services to all our customers, whether it is retail, whether it is pensions, whether it is insurance companies, foreigners. We do that, and our CEO is also around. Fred, it is good for me to recognize the CEO of Fund Managers Association. He's the one who was supposed to be seated here, so I'll be speaking on behalf of FME, not ABSA Bank. So what is the nexus of the fund managers and the SLB? I think as it has been pointed from one speaker to the other, fund managers hold the assets in trillions. If you combine the CIS and the pension assets and the insurance assets which are under fund managers, it is in trillions of shillings. And those portfolios are long only. So we've been specifically just investing in a long-only style, meaning that we buy and hold. Sometimes we will exit portions of these assets, but largely we are on a buy and hold type of portfolio. So quite a passive type of investment style. I know that Timothy Wambui has said they've introduced a bit of flexibility where they have a core portfolio and a satellite portfolio, which is something that we are seeing, meaning that fund managers are getting out of the buy and hold kind of strategy and adopting to more aggressive and dynamic way of investing. and that would include then the SLB, because it's not only about churning the portfolio, it's also lending. So SLB comes in to help the fund managers bring out more value out of the assets that they hold on behalf of the customers. So where we come in is that part of the assets that are held by the fund managers would actually be what would go to the market, into the SLB for lending, and the fund manager would accrue the performance from the lending and obviously push up the returns that they are giving to the ultimate customer, who is most likely a pension scheme or an insurance company. That's how we come in. I think I pause there. It's as simple as that.
Okay. I think you've simplified. Thank you very much. Augustine, there is an indication that there are a lot of idle portfolios, as Elizabeth has paid, and something should be done to ensure then we have at least a portion of some of the securities being availed for SLB.
Thank you, Justice, and good morning, everyone. My name is Augustine Misoka. I head the trading desk at SBG Securities. SBG Securities is an investment bank, part of the Standard Bank Group. So focusing mainly on trading equities, which are commonly known as shares, fixed income, and recently moved into the derivatives space. To your question, Justice, I think our role, ideally as investment banks and brokers, we are intermediaries trying to match buyers and sellers. And from an SLB perspective, it's matching the borrowers and the lenders. Yeah. That's our main role here. Now, my interaction with SLB has been very, very significant the past few years, and especially as we've been walking the journey of coming into the derivative space, because as Standard Bank, we are looking to come into the market as market makers for derivatives. But then there's a gap that's missing, where if we are to fully service the market as market makers, then we need to have somewhere where we can borrow the scrip. And that means we have to come in and borrow through a securities lending and borrowing mechanism. So that basically is our role as investment banks and specifically as SBG Securities.
So from an operations viewpoint, what has been your interaction with SLB, even as we go further into some of the challenges, even as you introduce yourself also?
Good morning, everyone. My name is Mary Wambui. I work at Sterling Capital. It's also an investment bank, stockbroker. I head operations, so Augustine has covered what our role and responsibility is as a market intermediary. But personally, as somebody who heads operation, my responsibility is to make sure that from the beginning to the end, operations are running smoothly, the systems are running smoothly, the interface of everything makes the clients happy. So as a market intermediary and somebody who has to make sure that the client is happy and bringing together the borrower and the lender, we have to make sure that there is accessibility of information. And for me, my interaction with SLB is that information to the clients. We've received, like Conrad had stated earlier, we've received a lot of inquiries from clients who want to know how the borrowing and the lending works and all that. So our interaction has been now giving the information to the clients and just the education to the market.
Okay. Yeah, I can still stick with you and ask you another question on the stakeholders within that space. Do you think there are any stakeholders we've left out in the current arrangement, and what are the current figures? I know CDSC highlighted a few things around the performance, but is there anything you would want to add insofar as activity in that space is concerned?
I think for all of us, let's look at the market right now. The biggest movers of the market is the institutional investors, right? Up to recently now that we, the CMA, NSE, and CDSE has been trying to bring the retail participation into the market. Our interaction with the market, because even for us, we've had incidents where we've had institutional clients come to us, and we are a market intermediary, and they have their CDAs, the custodian who is also their market intermediary.
Yes.
But the role that's in between here we play with them is like we have to find them a counterparty for the transaction they want to do and take them through the whole process.
Okay.
And I feel for me the gap that really has been there now between us and the stakeholders is whenever I have a transaction between two institutions, as a market intermediary broker, there is no incentive for me, because if you look at the structure of how the fees are laid out, so we still feel we need to bring together to make sure that the system works perfectly, even when we have the institutional clients and when we have the retail clients, because we need to just ensure that the retail market is able also to meet the demand and of the institutional clients. And there's that gap of bringing the retail clients into the lending of their securities. And if maybe I can just point out the accessibility of this information. Let me take, for instance, if we have positions of borrowers and lenders right now, the accessibility of that information is only through the CDSE system, right?
Okay.
How many people have access to that system? It's the custodians, basically just the CDAs. So how do we bring that accessibility to the general market?
Yeah,
How
CDS stand for Central Depository Agents, right?
Yes.
Okay.
It has the custodians and the brokers.
Okay.
But now if we have clients, they have no access of that system. So if, let's say, an institutional client and a retail client want to see what the positions are, well, what can I borrow, what can I lend, what are the rates in the market, I have to go through the CDAs. So if we can, maybe as we figure out the new systems, if we can be able to figure out how accessibility of this information can be in the market.
Okay.
Yeah.
So what is the minimum amount if I wanted to do an SLB?
Right
100.
now, currently, yes.
Okay. Wainaina can help us in terms of the minimum amount. But as we figure this out, I think I can go to you, Augustine. Paint for us a picture of the relationship between the three, so then we fully understand. So if I wanted to buy a derivatives contract.
Derivatives and SLB. So for a proper functional derivatives market, you need a market maker. So a market maker is a person who stands good to buy or sell your derivatives at any given point in time. Now that market maker needs to hedge himself, or they need to hedge themselves. So that means if they have gone long, that basically means they've sold you a derivative, they need to come to the spot market and go short. So basically, they do the opposite of what they do on one side. So as is currently, a market maker, with the way the SLB framework is working, it's not, with the way it's functioning right now, it's not possible for a market maker to give you both positions, a buy and a sell, because then they'll have to, if they want to go short, they'll have to go to the market and sell first, and then come back and offer you the solution. So ideally, what I'm trying to say is they are interrelated, because a proper functioning market allows the market maker or the clients to go long and short at any given time, because they know they can hedge themselves by going and borrowing the shares. I think most speakers have mentioned here, and just to reiterate that those are some of the key issues that we're facing, because as a market maker, like ourselves coming into the market as market makers, we're struggling with the same issues. Most of our clients are offshore clients, they want the comfort of the global standards and what's happening globally. So if I'm to come to Kenya, what are the frameworks that are in place? Are they the global frameworks? Then now we face those challenges. So ideally, the three are intermarried in some ways because they help to give the market a bit of robustness, and also helps in price discovery, because if I'm able to take a position and say go short, I think Timothy has said 60% of their assets are probably being held for the long term, 40% for trading. So you can imagine, and I think, I don't have the right figures, but I think that's probably what happens in the market. About 70% or 75% of the assets are actually held by fund managers who are holding them for the long term. So you find that there's no price discovery. So then that's where derivatives and SLB marry each other to make sure that you're able to take a position and there's price discovery in the market.
Yeah, so going to Elizabeth, I think you covered a bit around what fund managers do and how this could help improve return on the portfolio that is already held. But you can also give us a perspective of some of the key aspects of fund management and in the interaction of fund management with trustees. That relationship is sometimes what may be causing some challenge. I know Mr. Wambui here talked about having a meeting with trustees at some point to make them understand what exactly is going on. But as you do that, you could also talk about how fund managers could play a more fundamental role insofar as SLB is concerned, and highlight whether there are immediate actions that could be taken to ensure that that happens.
So we operate as fund managers, we make the investment decisioning, we do the research, and we implement the investment policy statement that is developed by the trustees and ensure that the mandate is in line with the regulations that are given by the government regulator. The other service providers we work with, because we only make investment decisions, is definitely the custodians. So for a fund manager, we will make the investment decision, and the custodian is the executor of the decisions, so they complete the settlement of the transactions. So fund managers only make the first level of decisions, and then the transactions are completed at the bank level by the custodians, and we all keep records, and the custodian will be the one collecting the incomes and the investment returns that we are making. So even from the SLB, the monitoring obviously will be two-pronged. We will monitor as a fund manager, but the ultimate responsibility will be lying at Janet's desk, where they'll have to give confidence to the trustees that indeed the value or the benefits that are coming from the investments that are lent are actually there and they can be ascertained, and therefore even when it comes to audit, they are auditable, they are verifiable, and therefore the members are not disadvantaged in any way. So the other person who I think is a missing link in this conversation is the fund administrator. Okay. Because the fund administrator comes in to keep the financial records of the scheme, and those are the records that are then audited. And the records that are kept by the fund administrator, especially on the financial side of the fund, not the member side, means that those are the audited accounts, and there has to be an alignment on how they record SLB transactions and how they even give value, because distributions will come from the financials. So how do we distribute dividends that have accrued to an SLB in a period where we are distributing member benefits at the end of the financial year? How does the auditor look at it? What is the accounting methodology or that is going to be used? So you need to bring to the table these other actors, the fund administrators and the asset consultants, because as fund managers, we make the decisions, we do the research. Recently, we have seen an introduction of asset consultants to pension schemes, where asset consultants are help to cement the decisioning of the fund manager on behalf of the trustee. So the fund manager makes a recommendation, the asset consultant interrogates or checks and challenges, and then the decisioning is then taken, and that gives confidence and protection for the trustees. So those are two other stakeholders that probably you need to think around when you're consulting, bringing them on the table so that there is alignment and we do not find ourselves at a crossroad at the point of transacting. Now, how can managers make SLB more, the uptick to go higher? I think the education part of it. We hold quite a number of forums for our trustees, and the conversation needs to be alive. If you go to many of the trustees' forums or trainings, I do not think that we have had conversations about SLBs as exhaustively as we have had maybe for alternative assets. So that needs to really deepen a little more, and fund managers can take the forefront of taking the information, because I believe that for any product to gain scale, we need to start with awareness. You need to go to access. I think we started with access before awareness, which is a bit more convoluted. So awareness, access, affordability, and then scale will happen. It is good that the awareness is at the technical level. Now we need to drop that awareness one level down to both individuals and trustees, and those stakeholders will then, you'll find that the fund manager will have an easier decisioning, because fund managers, believe you me, they are very well aligned and they can understand these structures. So we address, if you address the awareness at the bottom, then you'll find that there's success. But of course, there are those bottlenecks that were raised here, or even the ones that we're talking about, especially collateral. Because you do not want to lend or to advise your customer, we are going to lend, say, 20% of your books. And then knowing our country and knowing the kind of things that can happen, then things go wrong on your end, because my contract is only 3 years, just like the trustee's contract is 3 years. So we need to have a watertight framework that protects all the actors and allows for continuity beyond the life of a service provider, whether it is a trustee or a member or a fund manager or a custodian. This infrastructure or governance structure that is regulating the SLB need to be watertight to allow us to transition without any risks or exposing anybody to such risks. So if we address those ones, I believe that SLBs are actually, we are ready for them. We have the assets and we want returns. We are tired of just giving, government bonds. We are accused as fund managers. We only buy bonds and sit pretty and then ask for a return. We really are not proud about it. I can't do a whole CFA to buy bonds. I intended to do more with it. But unfortunately, we are left to do just the very basic, long-only kind of portfolios. So really exciting to see that we can get out of this cycle of just doing the very plain vanilla type of portfolios and start giving our portfolios some level of excitement, because it's exciting even for us. It's boring to do just buy and hold.
What are the frictions in the market that we have that are affecting higher transactions in SLB?
We need to be more active, right? And just when you then look at active in terms of enabling SLB, awareness is a starting point. The trustees, the asset owners, whether it's the insurance, whether it's the pension schemes, must understand that when they participate in SLB, what does it mean? And what does it bring for them? So if that awareness is not there, then we'll continue talking. This conversation around SLB, will continue for a very long time. And it will then be important that we are still also providing that clarification and reiterating it in terms of what their fiduciary responsibilities is. And Elizabeth has spoken about risk. those perceived risks, are they real, or is it just, you think that if I lend out my securities, then that's the end of it, right? And noting, of course, that they hold a critical role in providing that assurance to the members, all of us here who are participating in a pension scheme. The second one for me is around operational readiness. Okay. So it is good right now that the CSD has provided a system that's able to do that. But for me, where I'm sitting as a custodian, I must provide that comfort to my client that I know they've either lent out 20%, 30%, and this is where it is. These are the activities around that 30%. So I must invest in systems, right? I must ensure that my processes speak to that process and are able to safeguard that process. So whether then it means when you're talking about the margin calls, I must then be able to say, I must be able then to ensure I'm tracking it intraday. There was a conversation around pricing coming at the end of the day. That's not an excuse. I must invest in systems that are able to monitor the market on a daily basis.
Okay, so here I is referring to who?
Custodian.
Oh, okay.
As a custodian.
I thought you were talking about CDSC.
No, you've asked me about custodian.
Okay.
Right?
Okay.
So I'm talking about myself as a custodian. And the valuation and the reporting, just to provide that comfort to my clients that if they call for a report right now, I'm able to provide that to them.
Okay.
The other thing for me is around the standardization and best practices, right? So we must then ensure that there's alignment from an industry perspective in ensuring that whatever contract, whether the GIMSLA, whatever contract we're using, it's standard. I'm not building my own templates. Another person is building their own template. Conrad at the end there is also, building his own template. It's just ensuring that the contract that we're using is standard, and it will also still provide comfort because then there's consistency across that. Then the settlement processes and the reporting standards. There was a conversation around how does a pension scheme provide RBA comfort in terms of what they hold, what they're still holding, and what has been lent out. How do we ensure that that information flows through? And where Timothy is sitting, he's still able to provide that comfort that he's still within the approved investment guidelines.
Okay.
The last one, I think the other one for me is around confidence building. It's something new. But I don't think it's new in the sense of I have lent you money, I expect you to give me back my money, right? So it's only now we're talking about securities. And the dynamic around the market is moving. How do I ensure my collateral it still covers me if the person who has borrowed does not bring back that securities. And why that's why it's then important for me to know who am I lending to. Who is that counterparty, right? And that's why the bilateral model comes in, because I know that if I have this pool and I'm lending my security to David, I know who David is. Yes. I know his financial capability. I know how, possibly even to the extent of when I lend this security, what is he doing with it? Yeah. And will he bring it back? Right? Okay. Because yes, we can have the collateral, which is 110%, but the market can really rally. And if at that point I've not managed to get, to do the margin call and get the additional margin in, I should be able to say that David has capacity to bring back my security. Okay. And I think that's where sometimes you find there is a bit of discomfort or fear, if I would call it that, in clients participating in this. So this SLB will not be enabled by the fund managers or custodians. It's all of us as market stakeholders. Okay. So whether you're talking about the Capital Markets Authority from a regulatory perspective, we're also talking about Insurance Regulatory Authority, we're also talking about RBA, for them then to have a common understanding of the security and how they enable the players within the ecosystem to participate in it.
Okay.
It also talks to the CDSC and Central Bank as well, right? Because I don't think we should limit the SLB to equities. We should open it up to fixed income as well.
Okay.
Right?
Okay.
It talks to the fund managers, the custodians. Elizabeth spoke about administrators who, do the fund accounting, but also now puts a responsibility on me now as a custodian to say, what other solutions am I providing to my clients to be able to give them that full view of all the positions that they're holding, whether they are in derivatives, whether they're in custody, or whether we've lent out those securities. So we have to look at it in terms of what is every participant's role, and how do we then build that confidence in ensuring that whatever point it is I'm touching within the SLB value chain, we are providing that confidence to the market.
Okay.
I think a lot has been covered, and maybe just to sum it up, number one is ensuring we have an efficient system from the beginning to the end, because without that, if you have a vibrant market come in and at some point we fall through gaps, then we're going to have challenges and setbacks. So a very effective working system for everybody, whether it is the market intermediary, the institutional investors, the retail investors, everybody, it just needs to work for everyone. Number two, I don't know how many people in this room have derivatives accounts. Maybe just by show of hands. If you have a derivatives account. So you can see, we
4 people.
4 people.
Yes.
We are
Clap for those who already have. Yeah, unfortunately, as a regulator, I couldn't raise up my hand because there are certain ties there are certain things that we have to do as a regulator in order to invest in the securities market. And I think we will talk to Mr. Shame when he comes, so then and Mr. Njoroge here, so we can start trading derivatives freely. But it's one of those things that you can do to test the environment, even as you get more confident to get into other spheres of SLB. Otherwise, we'll be talking about this now, and 5 years down the line, we'll still be at the same point. So it needs to start with us. Yeah? But you can continue.
Yeah, so you can see even within the market itself, it seems like we are not confident with the products that we are bringing into the market. So the one thing to bring confidence, it has to start with us. And we need to also understand how does it work. As a market maker, I'm a market maker, Sterling Capital, with derivatives. And you cannot, it's very hard to separate the SLB and derivatives, because a lot of clients will just borrow to go short so that they can hedge on the other side of the portfolios that they are holding. So number 2 is making sure that everybody is involved in the market. So market awareness, let all these products that we've been bringing into the market, it seems like they still stay within the people who know the products, but out there, we're not marketing enough. So that number 2 is the market awareness. I think number 3 would be, and I've seen a lot of effort between the regulators and the products that we're bringing into the market. It's just maybe to appreciate the fact that we've reached a point and we are seeing there's a big gap. and that we are working on it. Because I think for us, we were among the first people that were involved when SLB was coming into the market and the challenges that we gave. And now, years down the line, we still haven't been able to move from the same bottlenecks that we had.
Yeah.
But, I appreciate the fact that now we are willing to move from there. So if we can be able to change some of the policies and just adjust to make sure that everybody is happy, the regulator is happy, the market is happy, and we can be able to do something from the beginning to the end. And thinking about the retail market, I know there are a lot of people who are concerned with the institutional market, but also the retail market, because if we are able to make sure that the retail market is in derivatives, is actively in the equities market, and they can understand how to borrow, I can lend shares for people who want to participate in derivatives market, then that makes a huge difference in our market. So
you used the term hedging. Maybe you can tell the audience here what that is.
Okay, so if I am I'm a marketing intermediary, but I'll talk like someone who's in the fund management side. So I have a whole portfolio here I'm sitting with of equities.
Yes.
The uncertainties in the market.
Yes.
I remember during post-COVID, I think it was 2021, the results of most of the fund managers and the portfolios for what they were holding in equities was negative.
Yes.
Okay, and right then is when the derivatives market had just kicked off, and most of these fund managers, when we would have conversations with them on how they would manage their portfolios better, is they'd say we were exploring the point where I can hedge. Meaning, if I hold, let me use a counter like Safaricom, and the price has been going down, that means if I took a position on the derivatives market to short, or to, if I'm holding in the equities market, then I go short on the derivatives market, that is hedging, because as the price moves on this up on the spot market, it's moving down on the derivatives market. But if it is moving down on the derivatives market, then it means I am in the money if I have gone short. So as someone who has a portfolio which I have hedged against the derivatives market, then it means for me at the end of the day, either during maturity or whenever I want to exit that position, then I'm not reporting losses.
Okay.
Yeah.
So what Mary is saying is that you take a contra position on an asset to ensure that you don't lose when you take just one position. And taking a position means either purchasing or selling a security, right? So, Mary, do you have something? You seem to have something to add. I don't want to.
No. I was just agreeing with what you're saying.
Good. So thank you. As we finalize, coming to you, Augustine. In addition to what our colleagues here have said, is there anything you want to add on what you can recommend as someone who's very closely interacting with investors that could help improve the SLB trading in the country?
I had Jesse mention that they are in the final stages of ensuring that the bilateral model is up and running. That is one thing that most of the investors have been asking for, especially given where we sit, we see a lot of offshore portfolio flows coming either in or out of the country. So offshore clients have been asking for it. So the bilateral model, where they want to negotiate with the other party and close out their position. Then the second thing that would make the SLB market tick is that we've said we want to build a market for the future. We want to build something that is globally acceptable. Then that means that then as a market, CMA, I think it's either CMA or CDSC, should sign up to the Global Master Securities Lending Agreement, which basically ties down the country in terms of what happens, and especially key concern from offshore clients is what they normally call the closing out or the netting position. And what we mean here is that maybe I have borrowed Safaricom from Elizabeth. She has borrowed Equity Bank from me, and so many other stocks that we borrowed amongst each other. When we are closing out that position, what do we do in terms of the net settlement? Do we just see how much I owe you, I give you? We shake hands. So that is basically what happens on the Global Master Securities Lending Agreement. And then we have a Kenya schedule that talks about Kenya. It talks about our taxes. I saw on a presentation here, what does KRA think about manufactured dividends? So then all those things come into the Kenya schedule, because the Kenya schedule may be different from what happens in South Africa.
Yeah.
But we all borrow from the Global Master Securities and Lending Agreement.
Okay.
And lastly, to do all that, I believe then the country must be part of the International Securities Lending Association. So we need to sign up as members. Those can come later, but to just make sure that the market is headed in the right direction and it's a futuristic market.
Yeah.
I think all these things have to come together.
Oh.
So well done to CMA, NSC, CDSC for just making it inclusive and for making this happen, being in one room. That's a big step forward. And we are looking for more sessions to just forge a better future. Let's build for the future. It's the generations behind us that will judge us. It's not us. So happy to see this progress. Thanks.
Okay, thank you.
But I think for me, in terms of some of our key priority areas is around the regulatory clarity and alignment.
Yeah.
So we're talking about CMA, RBA, IRA. How do the participants in there look at SLB? What are the tax treatment, as Augustine has alluded to? How do we report on that, and how is there alignment in terms of how all the regulators view SLB, and how do then the asset owners also look at it?
Okay.
Investor education. I mean, we've really spoken to that, but it's critical. It's critical because if we build that confidence, then there will be participation.
Okay.
Right. And I think the last one for me is around the operational and the infrastructure readiness. It will not sit with CDSC alone.
Okay.
Right?
Okay.
So all of us who want to be in that space must then ensure that we provide that infrastructure, those systems that will be able to provide that comfort to the participants. So it will look at the streamlined settlement and operational processes. It will look at clear roles between the broker, between the fund manager, between CDSC, between even say custodians if we are playing in that space. The last one, and I think which is also very critical, is automation. Automation will give comfort that I'm tracking that security, I'm tracking the market, I'm seeing how it's moving, and I'm making the margin calls when it's needed. We
have picked up the key points that will now carry forward to ensure that our market picks up. At this point, I want to drop the mic. Wainaina, you can come and take it.